What is an FFA and who trades it?
An FFA is a derivative. It's a derivative based on future rates for shipping either crude oil or clean petroleum products from one port of the world to another. It's cash settled against the Baltic Exchange and cleared primarily through either NOS or LCH, the London Clearing House, and now we're even starting to see NYMEX do a little bit of the clearing for them.
How would you describe the current state of the market?
I think the current state of the market is healthy. Volumes have been pretty good over the last 3 months or so. I think a lot of that has to do with the volatility in the crude markets, coupled with the geopolitical instability that we're seeing in various parts of the world.
What do you think the future of the FFA market looks like?
I think the future remains strong. We're starting to see more and more financial players enter the market. We're starting to see the market mature, where the counterparties now have been able to integrate their physical shipping with the paper, with the freight derivatives as a risk management tool. And I think the market just continues to mature, and as a result, people get more comfortable trading larger volumes. So I'm quite optimistic about the market.
What does your company plan on doing to attract more investors?
We continually market the product at events like this. We continually get out, and our primary purpose is to really get out there and educate people on what exactly the FFA is and how to use it.
And who do you want to attract?
We would love to attract more ship owners into the market with natural exposure, with a need to hedge forward rates and lock in revenue stream by doing so. We've also like to target more integrated oil companies to trade the product in an effort to hedge their margins and things like that and their transportation costs.
Why would a ship owner want to do business with you?
Well, a ship owner would be a natural seller of the FFAs. It's an opportunity for them to lock in a rate forward and hopefully maintain or lock in some kind of revenue stream going forward in the event that the physical market doesn't meet their expectations.
For the ship owners that haven't entered the market, why do you think they haven't entered the market?
I still think that there's a lack of education about the product, and there's also a stigma amongst some in the market when the product first started in the early stages, where there's a lack of liquidity. I think that's changed quite a bit over the years, and to be brutally honest, I think that the liquidity argument is often made by a lot of those who have never actually tried to understand the product or even trade the product.
And what kind of volumes are you seeing today?
I would say they're healthy volumes. There's especially now with the volatility in the crude markets, it's not uncommon to see upwards of 2 million tons a day trade within the market.